So there's been a lot of uncertainty, obviously, this year with stocks, with even the magnificent seven stocks. You talk about Apple and Tesla, Amazon, Nvidia, etc. A lot of them are down 10 to 15 percentage points this year already. And a lot of that obviously is because of the new regime in the US government, as well as tariffs and all this other stuff going on around the world. But one stock that's doing really well this year is Spotify. If you look at their year-to-date gains, 28.06% year-to-date. Over the past year, they're up 131.93%, and over the past 5 years, up 371.4%. Now, year-to-date is one I've really been looking at a lot so far because I'm looking at what is actually doing well when the rest of the market's doing badly. Are there stocks out there that are actually doing well despite all of the uncertainty that's out there right now? If you look at the S&P 500, it's down 3.29% in year to date. The past month down 7.63%. So it's not too crazy. It's not like it's just plummeting necessarily, but it's been really up and down lately. Past 5 days, a little more hope, maybe a little less tariff talk. But as far as what we should do, I don't know if it's really a good time to just be like, oh, well, we're just going to buy low and expect the next 4 years to go well. If you look at why it's up today, why the S&P 500 is back up 1% today, a lot of that is because the Fed had their announcement that they are in no hurry to cut rates amid high uncertainty about Trump tariffs, but they are on track for a couple of rate cuts that they planned on doing in 2025. And they say that economic growth seen at 1.7% in 2025, inflation is higher at 2.7%. And then U.S. Central Bank keeps policy rate at 4.25 to 4.5% range. So they're not necessarily panicking on anything yet. So a lot of people are taking that as a good sign, hence why the S&P 500 is back up today. But if you look at like year to date of some of the top stocks, especially the Magnificent Seven, it's been pretty bad. So just to give a few examples, I'm not going to go through all of the Magnificent Seven. You probably know by now why Tesla is going down. That's a whole nother issue. But Nvidia down 15% year to date. If you look at Google, they're down about 13% year to date. And you look at Amazon, they're down 11.2% year to date. So why is it that Spotify seems to be defying all the odds and actually is up 28.06% year to date? And we're only like 3 months in. Well, one thing is that apparently streaming demand has hit record levels. According to an article that just came out the day of me recording this, there are some indicators from TipRanks and from other sites that the demand has hit an all-time high for streaming. Also, JP Morgan came out and said that Meta and Spotify are the best internet sector stocks if the economy weakens, which is what a lot of people obviously are worried about right now. So everybody's like, well, should we just sell? A lot of people are panic selling. Some people are panic selling their growth stocks and maybe redistributing that into more like dividend stocks, things that are less volatile. You know, there are some people are just trying to hold cash right now. But if the economy does weaken, you know, over time, they say that Meta and Spotify are some of the best in the internet sector to basically be okay if that were to happen. Also, another thing about Spotify is they just became profitable. They had a full year of profitability in 2024. I've always been scared to invest in a stock where the company hasn't even really become profitable yet. So Spotify is one I've been watching a long time because of their massive growth, because of their great products, their growth into something that is dominating streaming, which is podcasting and music. But also they are now they have 1 full year of profitability last year in 2024. So they don't have a weird like negative PE ratio anymore. Another thing I like about them is, if you've seen some of my other stock videos, you know that I like to know what people on the inside of the company think of the leadership. 4 out of 5 stars is what the employees at Spotify rate working here. So not only do they have a 4 out of 5 star overall rating, but 76% of employees at Spotify would actually recommend working here to a friend. 71% approve of the CEO. So from the inside, people who have actually worked here really actually love working here and give them a very high score in pretty much every major statistic. Another thing I like to look at just as another little indicator, again, as I always say, there's no like one size fits all here. There's no like one indicator that should be like the driving force of all your stock decisions. But I like to look and see what other analysts rate things and what the consensus is among a few dozen analysts about a stock, just to kind of see another perspective other than my own. You have 63.4% of 41 different analysts saying that Spotify has a buy rating right now. You have 31.7% giving them a hold rating and only 4.9% of analysts giving them a sell rating. You can also see what hedge funds are doing as well as other users. So hedge funds will give you probably a better indicator of what's going on or whether something might be worth a look than just the average user. But if you look at what hedge funds are doing, more of them are buying than selling right now. So majority, over 3 of the last 4 quarters, are actually buying. And that's directly from hedge funds, which their entire job is literally to get the best returns for their clients. Now we also have to look at the PE ratio, which it's not always exactly the same depending on the platform you're looking at. But you see it's a 97.44 on Google. If you look at Robinhood, for instance, it's a 92.81. That's pretty high. A lot of people do not want to buy a stock that is, over like a 20 or a 30 PE ratio. So you also have to look at, though, what is the growth? What is the market for that company? So these PE ratios can be a lot higher in some categories and lower in others to kind of just compare them. Now you also have to look at how much growth they're getting, and not just the PE ratio. So one thing that some people do is they will look at the growth compared to the PE ratio instead of just looking at the PE ratio. Because if you just go by PE ratio, you might end up with a bunch of stocks that are kind of in similar categories instead of actually buying some of the ones with the highest growth. So that's why some people will say that the PE ratio is not the end all be all, like some people say it is. But if you look at year to date, 28.06 year to date is very good compared to the market, especially 131.93 in the past year compared to a 97.44 PE ratio if you're just looking at what it says on Google. So if you happen to be one of those people that goes by the PE ratio versus growth, it looks a lot better than if you were to just look at the PE ratio and not compare it to how much growth you're getting year over year. And in the past year, you're still up 371.4%, which is really good. Now they have missed on EPS, I believe, the last 2 quarters, unfortunately, but they did beat in revenue in the last quarter of December 2024 at beating it 2.1%, missing on EPS by 14.67%. But year over year, revenue is up 15.55%, net income is up 624%, diluted EPS is up 602%, and net profit margin is up 552.88%. So if you look at their quarterly financials, you look at their earnings calls, it's not necessarily perfect, missing on EPS, like you can see right here that they've missed on a couple of quarters. But overall, they're also increasing what is expected. So they are really bullish on the future. They're doing really well right now. It's not perfect. The PE ratio is very high. They've missed on EPS a few times, but if you take the bigger picture into account and you're looking for something that's doing well despite what the general market is doing right now, when the rest of the market is down, you have your top stocks year to date, the Magnificent Seven that everybody was making money off of last year are all down over 10% this year for the most part, except for maybe like Meta. Then Spotify looks better and better the more you look at it. Obviously, this isn't financial advice. Just thought it was something to point out. I've been looking at a lot of stocks that seem to be defying what the rest of the market is doing, and Spotify really stuck out to me so far this year.